Hello everybody, welcome to this week's live stream. All-time highs yet again in US stock markets. Who saw that coming? Me. If you haven't attended these before, the way it works is we'll take a quick look at the major stuff, the major announcements coming out for next week. Then we'll jump onto the charts, take a look at a mix of different markets, stock market indices, currencies, gold, silver, oil, natural gas, Bitcoin. And then if there's any stuff that you want looking at, if you put... Oh, sorry. It's a bit loud, isn't it? If there's any stuff you want looking at, then put it in the chat and we'll take a look at it once we've been through all the usual stuff. But we've seen, yet again, it's been another week where US stock markets have gone up. The trend in these markets continue. I'll talk a bit about the US equity trades I've got running at the moment. It's been a good year for those, not surprisingly. If you subscribe to the newsletter that I send out every week, you would have seen some of the numbers of that. I'll do an update for the numbers today. But at the moment, there is nothing stopping these stock markets. They just continue to push higher. So for me, that's still very much the focus at the moment, but more of that in a second. Let's get some of the old housekeeping out of the way. So first of all, this presentation is only for educational purposes. It does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation for a transaction in any financial instrument. David Jones accepts no responsibility for any use that may be made of these comments or for any consequences that result. You should consider whether you understand how spread bets, CFDs, futures, foreign exchange work, and whether you can afford to take the high risk of losing your money. Trading is risky. Okay, that's that. So next week, there's a lot going on next week. It's a quiet week this week for news. There's quite a few things next week to watch out for. I think probably the big one is Tuesday, and that's when we get the US inflation data. We had the interest rate decision last week, didn't we? Last Wednesday. So markets, and there was a lot of volatility off the back of that. So markets are still concerned about inflation, or still want to see that inflation is on the wane. So I think that will be interesting next Tuesday. Then Wednesday morning we've got UK inflation data, interesting. Then we've got European and Japanese GDP later in the day, so how well or not are those economies doing? And then UK GDP, UK economic data on Thursday. So it's a busy week next week after a quiet week on the economic calendar this week. So let's see how these markets react. But I don't know, unless there's a massive shock there, talking from a stock market point of view, unless there's a massive shock with that US inflation numbers, at the moment it does feel, famous last words, that there's not a lot to take the wind out of the sails of stock markets at the moment. Even when we had that interest rate data, it sold off on the interest rates, but the next day it closed higher than where it was before the rates data came out. So let's see what happens next week. Right, quick word from me, the sponsor, very quick. I'm doing a partnership with Trade Nation, a broker. I've talked about this before. I do a lot of my trading with these guys over recent months because it's a tight spreads, and if you're trading, tight spreads is all part and parcel of the costs of trading. I'm working with these guys because there's a couple of people there who I've worked with in the past, even more experienced than me in markets. If you want to sign up as one of my clients, inverted commas, I'll be doing lots of webinars and stuff like that for people who sign up via me. Go to bit.ly/David Trade and it should take you to a page like that. And the link is in the description down below. So that's that. I do a WhatsApp group. The WhatsApp group's been running for a year now. I do a daily update. So first thing in the morning, a shorter term look at markets, the big stuff, dollar, stock markets, any other currencies that look interesting, oil, gold, if it's interesting, all that sort of stuff. Markets I'm watching, trades that I'm running, what I'm doing with the trades I'm running at the moment. I'm long oil. I've been long oil for a few days. That's done okay. Big day yesterday for oil. We'll take a look at that. So I'll talk about that. Any questions people can fire in throughout the day. Any questions they've got. And I also, in the afternoon, I've started doing this US update for the stocks I cover, the stocks I'm trading. So I'm doing this thing. If you subscribe to the newsletter, you would have seen it last week. But I'm trying to do a trade a day on US stocks. This is the progress so far. And again, if you had the newsletter last week, this is an update to that. As of now, it's updating now. So these are the positions I've got at the moment in US stocks, all leveraged. So I got stopped out of a Win Resorts yesterday. I was short. The rest of them are still open. So I've got 27 open positions. Started doing it the 18th of December. Try to do a trade a day or thereabouts. It's up. You can see. Hopefully you can see the numbers, but it's up 5,090 or so at the moment pounds, and that's on a risk of £500 per trade. Of course, you could trade it with a risk of £50. You could trade it with a risk of £5,000, whatever. But it's done well, understandably, because stock markets have been going up, haven't they? So for me, if I'm net long stocks, it should have done well. If you haven't made money off US stocks this year, you should have a word with yourself. Because it's been one-way traffic in this market. So it's an interesting experiment. It has done well this year. I talk about the US stocks positions in the WhatsApp group. The last trade I did was a couple of days ago. Dollar Tree. I went short Dollar Tree. That's losing money at the moment. I went long Alphabet on the 6th of Feb. Long Aflac, short Coca-Cola on the 5th of Feb. So 4 trades so far this week. 3 winners, 1 loser so far. But I talk about that in the WhatsApp group as well. So if you want to get access to that, you can join the WhatsApp group. And the screen directly in front of me has just died, I've seen. What's happened here? You don't need that, do you? Hang on, let's try and bring it back. I think it's the PowerPoint that's died. So it is there. Okay, let's try that again. So if you want to join the WhatsApp group, it's not free, but if you sign up with the code YouTube, you can try it for a month and you get 20% off the first month. So that's in there. And there's a whole load of stuff that I update during the day. And I've still got these ads on the live stream. I haven't figured out how to get rid of them. Sorry about that. So use the code YouTube, and the link and everything else is in the description down below. Okay, that's it. That's what it looks like, the WhatsApp. If you want to sign up for the newsletter is free of charge. I send it out every weekend. You can go to the website, davidjonestrading.co.uk, which lands you on that page, or it should do, and you can sign up for the newsletter, the weekly newsletter in there, put your email in there, and you'll get that. And I have actually started sending it out again this year. So that's all of that stuff. Okay, let's have a look at these markets and see what's going on. What is happening with these US stocks then? So we had a bit of a flurry of excitement. It's come off a bit, hasn't it? But if we start off with the S&P, we're at all-time highs again. This shouldn't come as a surprise as anybody who's watched these things for a while. I'm a big fan of following the trends. We know the trend has been up since a year ago on the S&P, the broader US stock market, after the sell-off we had that started in January 22, ended in January 23, or actually here probably you could say, October 22. And here we are, higher still. So for me, I'm very much still buy the dips on US stocks because the trend is up. If the market got knocked back, this is the Nasdaq, sorry. If the market got knocked back, 800 points from where we are now, so about 5%, we're only down to where we were about 6, 7, 8 days ago. So it's nothing, because of the strength in these markets. So for me, absolutely still a buyer of dips for US stocks. S&P 500, there we go. Fresh all-time highs on the S&P above 5,000 today. So yeah, I think it would be interesting if we do get a sell-off, because we have had, if we look at the last, it wasn't even that big a sell-off, but we've got to go back to the beginning of the year where we had 4 candles in a row when the market sold off, and then we've only had a couple since then. It's sell-offs so far over the last month have been rare. It will be interesting, I think, if we get a deeper sell-off. My assumption will be we'll see the buyers come back in. But let's see. Let's see what happens. But, US stocks, what can you say? All-time highs. There's still an appetite out there to be a buyer. So I'm just going with that trend. If you look at the DAX, the German market, a little bit different. The DAX, it did very briefly make a new all-time high on this Wednesday, and it's been a bit sideways since then. So a little bit boring, the DAX, but the bigger trend is absolutely still up on that. So that still looks okay to me. FTSE, as usual, the FTSE doing its own thing. The FTSE is pretty flat over the last 12 months. There had been a trend this week in the FTSE, from 17th of Jan, bang, 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 that had done all right. Started turning it around on Wednesday. Arguably, you could still be a buyer of the FTSE. An aggressive trade for me would be a buyer with a stop, I don't know, maybe 50 points away. See if the market at least pulls back into the range of the last week or so. But the FTSE is always a bit of an odd one because the makeup of the FTSE, will move different to these US markets. So it can be a little bit strange, the FTSE. That's that. The Nikkei, the Japanese 225, fresh multi-year highs again today. So I was sort of hoping for a bit of a deeper sell-off in the Nikkei, but again, broke out in earlier this year, 10th of Jan, bang, 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 and fresh highs for this move over the last couple of days. So it's all rosy. Everything's rosy in the world of stock markets at the moment. So so for me, no interest in going short while these markets are so strong. I was looking for I've not talked about it much. I will talk about it a bit more in the future, but I've started doing a bit more really short-term trading, day trading. And I was watching, there could be a trade there, actually. This is the NASDAQ. So the trade I was looking to do, we'll see where it is when I finish this, is be a buyer of a dip, which is this is the dip. So let's hope I don't miss it. But I thought that was an interesting trade to try and get into this strength of the NASDAQ. I would probably still want my stop at the very closest below the 7:30 low from yesterday, 7:30 my time, UK time, which is about, 70, 80 points away. A more conservative stop and a better stop, I think, is the other side of yesterday's low, which is about 100 points away from where we are now. But I think that's an interesting market. I'll have a look at that later on today. There might be a short-term trade for me in this NASDAQ or S&P this afternoon. But, these markets are still strong. So that's stock markets. And that has been most of my focus over the last couple of weeks because lots of other markets aren't doing that much, I don't think. But anyway, let's have a look at the dollar index. Dollar index, so this is the US dollar against a basket of different currencies. I mean, the move we had on Monday, that was bullish. It broke out through the highs from December. It'd be nice to get another breakout through that high. But overall, I'd still be a buyer of the dips on the dollar index. But you can see these are daily charts. It's all been a bit sideways the last few days. I did wonder, I put it in the WhatsApp group this morning, if you really wanted to be a buyer, there's an argument for being a buyer here in the short term with a stop maybe the other side of 103.80. It's not really a trade that jumps out at me. But, it had been, for me, such a great market in the past on the way up here, May 21 into September 22. And it's been, for me, a little bit scrappy since then. So I think it's a bit more of a harder market for me to call at the moment. So I don't know. I'd buy the dip. I think if it dips back down to 103.50, it's perhaps a bit more interesting. But anyway, it's had a good run for the last, 6 weeks or so. So yeah, there's that. Oil. I am in the oil trade and it's going up, which I'm very happy about. So I bought oil. When did I buy oil? Wednesday. So I bought oil on Wednesday. On the dailies, it's a bit boring, I think. We'd had this run up that ended at the end of Jan, interestingly, ahead of the old highs at $80. We do have a lot of support from oil from the old days, from last year, May to June, sort of 63, 66. But from a more medium term point of view, little bit boring, I think, but I bought it based off the hourly charts. There we go. So I bought it, I think at 74 earlier this week, Wednesday this week, just because we'd had a couple of days of the market making a recovery, and I thought, oh, it's worth a trade. So I bought it at 74 with a $3 stop, I think. So it's time for me to move that stop to trailing. But that's done okay. But it'll be interesting to see what happens next week, because you can see just on the hourlies what a barrier this $80 has been for oil going back almost 3 months now. So let's see what happens. So I'm in the trade. I'll put the stop to trailing later on today, and we'll just see what happens next week. If it blasts through 80, that'd be great. But 80 has been, a real problem since the middle of November. So let's see what happens there. Heating oil. I missed the trade this week on heating oil. Oh, that's gone like a rocket. I think heating oil is an interesting market. We did have, that's the dailies, downtrend, and it has been in an uptrend, heating oil, since May of last year. Came back to the uptrend late December, chugs along, and it's taken off a little bit. And here we are, heating oil is at its best levels since the 6th of November. So those are 3-month highs on heating oil at the moment. So again, I don't have the trade on. I was thinking about trying to buy the dip this week. It didn't dip enough. For me, it's a buy the dip next week. If it dips next week, it's interesting. So, but if anybody is in that, that's done well today. I was in this from back here somewhere, and I came out for a profit, but it was really frustrating for a long time. But it's really got to move on today. So there must be some news, mustn't there, about the energy markets? I don't know what it is. And then natural gas. What an evil market this is, natural gas. I've traded it once this year, and I look at it because it's just nuts. But if I put it in a WhatsApp group this morning, if ever there is a market that is almost set up to confound my approach to trading, it's natural gas. There's a good mate of mine who's been trading for much longer than I have. He said something to me, I think 20 years ago, that stuck with me since then. And he said it was about the NASDAQ. I think when the NASDAQ was selling off in the early 2000s after the dot-com bubble burst. He said the NASDAQ will do whatever it can to give everyone the opportunity to lose some money. And I think this is the case with natural gas. It's a market that just sucks people in both ways and tries to make everybody lose their money, which is maybe personalising a bit too much. But look at natural gas. So natural gas in 9th of January this year trades to a 12-month high, near enough, right? 12 months minus about 2 weeks. That's really bullish. And then what's it done now? It's back to a 9-month low. So it goes from looking really bullish to absolutely dumping. So it's dropped, what's that, about $1.40 since the middle of Jan. So in less than a month, it's dropped about 40%. Evil market, natural gas. So for me, it's interesting to see what's going to happen down here. If you were really committed to natural gas, and if it's going to bounce from anywhere, then we're here. We're back to the lows from April last year, down around 189, and the market did rally up eventually to 340. Are we going to see the same change in sentiment down here? I don't know, but it's an absolute nutcase market, and I try to avoid it wherever possible. So let's see. But there's a really interesting level next week to watch on natural gas. What's the news then? What is the news for this crazy market? Natural gas falls again, lowest in more than 3 years. Not the cash market though, blah, blah, blah. High supply and low demand, the classic supply-demand imbalance. Anyway, there we go. That's the crazy world of natural gas. But for me, I'm in the oil trade. Heating oil, I think, is an interesting market for next week. Let's see what happens. Gold and silver. I've got no interest in these markets at the moment. Absolutely zero. But I'll look at it because we always look at it. The ads keep coming up on the live streams. I apologise for this. I'm watching it on another screen and I can see the ads come up. I don't know if you hear me talking or you hear an ad for whatever it is, travel insurance. There we go, it's disappeared. It's just a boring market. Gold is trading where it was at the end of November. So there's just nothing there for me. We did have an uptrend. The uptrend's run out of steam. It hasn't sold off. If I had to do anything, I'd be a buyer on weakness to 2000. But there's just not a lot going on, is there? There it is on the hourly chart. So if it gets whacked back, near 2000, it looks interesting if you really want to buy gold. But for me, it's not in a trend. So, you know, I just go and buy the S&P instead. Do that. But yeah, not very exciting for me at the moment, gold. But then, of course, the dollar is going pretty sideways as well, so it all makes sense. Silver, same on silver. You know, again, there's absolutely an argument to be a buyer of silver down here from a short-term trade point of view. I wouldn't do it. I'm not that convinced, you know, but it sold off third week of Jan to around $22, rallied up to 23 and a bit, and it came back down to 22.20 or something yesterday, and we've had the bounce. But again, you know, you can see it's a pretty sideways market, isn't it? That's going back to August. That's 6 months worth of silver. You know, okay, lots of volatility. You know, like that's a 40% range, near enough. So big swings, but no real trend there for me. So yeah, not the most exciting market in the world for me at the moment. Bitcoin. So look at that. Bitcoin is Bitcoin's on the move. Look at that. So 47,000 for Bitcoin. Interesting to see what happens because, of course, these levels. What was the high? So the high was about 49 when that ETF, wasn't it, got launched. The Bitcoin or got the okay from the regulator. And that'd be an interesting market to watch next week. If it breaks through, let's call it 50k, you know, is it going to be off to the races again? Are we going to be looking at 70,000-ish for Bitcoin? It was bullish, you know, the trend has been up. We've talked about this a lot, not a lot, but in bits last year. The trend is absolutely up for the last year. You know, I'd rather buy a deeper sell-off, but, you know, we are where we are. And the trend is up in Bitcoin. So, yeah, let's see. Let's see what happens next week if we get the breakout. Of course, if you wanted to go short Bitcoin, if you thought this exuberance was overdone, it's an interesting area to short, and I would put a stop above 50k. That's what I would do on Bitcoin. I don't really trade Bitcoin, but yeah, interesting up here, but absolutely buy the bigger dip. And I think that's it, isn't it? We've done all the stuff that we normally do. We haven't done. Oh, let's do some of the individual currencies. Hold on. Let's do euro. I mean, euro US dollar is interesting. It's all a bit confusing at the moment because the dollar is a bit sideways. But euro against the dollar, you know, the most widely traded foreign exchange pair. If we go back to September 22, you know, we've arguably got an uptrend going on. And what's been interesting the last couple of days, it's come back to the lows from the 7th of December, around about 107. Last time we were down here, the market ran up 400 points. And it's come back down here again the last couple of days. So again, you know, if I wanted to buy, I put this in the WhatsApp group this morning, and if you really want to buy the euro against the dollar, there's a really obvious place to have your stops. And for me, it's the other side of 107. You know, with the market trading at 107.86 at the moment, it's relatively low risk. Let's say you had a 106.50 stop. You've got 135 points of risk. If the market goes back up here, you've got 300 and something points upside. So interesting, I thought, down here, the euro. Much more interesting than the pound. I thought about going short the pound today. But the pound against the dollar, we've got those UK inflation and UK economic data out next week. So maybe that'll spark a bit of life into it. But it's been pretty flat for the last couple of months, pound against the dollar. If I had to do a trade now, I would probably go short, I think, because it's just so sideways. And just to see with a stop, I don't know where to put my stop, 126.80 or something. But again, I did come out of a pound short this week for a profit down here somewhere, and I'd been in it, but I'd been in it for like two or 3 weeks. I've been in it forever. So yeah, so I'd probably look to go short, but again, not much direction. So I think for me, in FX at the moment, you know, we saw it in gold, you know, we've seen it in the dollar index, you know, we get these sudden moves and then nothing. So it's quite a frustrating market. And then just one final mention, markets I keep watching going up and never buy, cocoa. It's got to be one of the greatest trends of the last couple of years, cocoa. And again today, it's turned around today, but what a market. So the price of cocoa has gone September 22, around 22.40 to 5,600 today. So more than doubled in the last 15, 16 months, whatever it is. But someone did send me an email on cocoa this week. Richard sent me an email. I've not replied to it. But because I've been out. But I mean, absolute crazy market, crazy trend, great trend. If you're in it, buy the breakout, sit on it, easy money. Famous last words. Easy. What was that? 30% move from the breakout in the middle of Jan. Absolutely nuts. Let's see. Maybe we get a bit more of a decent sell-off in cocoa. So really the big focus for me next week is still going to be US stocks because they're so strong, and I've got this mix-up of well, that has bounced. That mix-up of US equities, so it's a big focus for me. So I think that's interesting next week. Oil is interesting because I'm long oil anyway. $80, is it going to be a barrier? And heating oil is interesting because, you know, the trend, the recovery in heating oil from May last year continues. Strong move. It's been a strong week for heating oil. And I would buy the dip if we do get the dip in heating oil. So those, and Bitcoin. So those are the interesting markets over the next week or so for me. Let's see how they all work. But what we'll do now is have a look at some of the stuff you want to look at. But just a quick reminder, if you want to try the WhatsApp group, go to the website, link is in the description, use the code YouTube, and you get to sign up and you get 20% off the What's It first month. So you go to the website, go to subscribe, and it's in there somewhere. There you go, WhatsApp group. You can do that and use the code and sign up for a month and get all this stuff every day. There we go, that's that. So what we'll do now is we'll look at the stuff that you want to look at. Have I missed this trade yet? I hope not. Hang on. Oh, look at that Nasdaq go. Nasdaq's rallied 50 points again since that sell off. Anyway, let's have a look at some of the stuff you want looking at. So, please check IMB. Is that Imperial Tobacco? Is it Imperial Tobacco? Imperial Brands. I guess that is Imperial Tobacco, isn't it? The old Imperial Tobacco. They have an 8.8 dividend yield. Look at that, 8.8 dividends. Oh, that looks all right, doesn't it? Is it really that high? Not that I don't believe you, but let's have a quick look at that. Let's have a look somewhere else. Hold on a second. I mean, that's a good. It looks like an interesting recovery thing to me. Let's have a look at IMB. IMB. What's it look like? Yield. Yeah, 7.9% yield. Well, there you go. That is still, for me, that is absolutely in recovery. If I was a buyer today at 18.80, so it's pence, isn't it? £18.80. The absolute closest I would have my stop is the other side of these levels, 17.50. The November lows. But no, that's it. You know, we've broken out through these old highs. We've broken out again. We've sold off. Buy the dip. Bish bash bosh, isn't it? That's an interesting one, isn't it? And WH Smith, SMWH. Hang on. SMWH. So UK stocks. They got, what was that? Was that COVID? That must have, yeah, COVID, or they got really hit. What do you think? Is this a yielder as well? Let's have a look at, what's the yield on? Are they still in the FTSE 100? No, they're not. FTSE 250. There we go. What's the yield on WH Smiths? Let's have a look at that. Oh, 2.3%. So not brilliant yield. And again, I suppose if you were a bottom fisher, it doesn't really appeal to me, but if you were a bottom fisher, there's an argument, isn't there, for being a buyer with a stop the other side of 11 quid. So they're 12.44 at the moment. So what's that? 10%-ish, 13% stop, something like that. So yeah, if you're a bottom fisher, it looks interesting. I prefer the IMB, but yeah, it's held, isn't it? It's that low from whenever it was, October 22, has held. So yeah, that's another interesting one. Right, what else have we got? ARM. I saw there's a load of excitement. I was looking at Wall Street Bets. Didn't they move 60% yesterday, ARM? There we go. ARM Holdings, Nasdaq, the old UK company, isn't it? Is it not listed in the UK anymore? It can't be, can it? It must be listed just a... what's it? Because they mentioned something about AI, didn't they? AI is the new blockchain, isn't it? Let me just see. Have they got any listing at all in the UK? No, it is all US. Okay. So yeah, I mean, as I often say, you know, when they move like this, what do? I would go short. That's what I would do. I would have, but then if it hadn't been for that, I would have bought them because the trend was just about up. They've only been on the market since September 23. I would take the view the market's overreacted to the old the AI thing. Let's try and find the headline. What was the reason for the move? Arm Holdings news. There, it's an early AI winner apparently. Many companies talk up AI, but ARM seems to be bearing out its exposure to the technology through its upbeat financials. Blah 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 blah. There we go. So maybe they are doing something with AI rather than just talking about it. But yeah, I would take the view, has the market overreacted? I would say yes, it has. But if I was going short, I'd put my stop at 130, which is a wide stop. But you know, the thing moved 60%, didn't it, or whatever it was yesterday. So yeah, a little bit too crazy for me, that one, I think, but an interesting one nonetheless. I notice you use wider stop losses and more breakout trades in stocks. If right, is it coincidence? No. Do you know why you notice that? It's just because I have traded stocks before, and I have done, not so much in the last year, a lot of medium-term trading. And my approach for medium-term trading that I talk about on the trading course I run is exactly the same approach for stocks. It's just in these sort of things, because we tend to be a bit more short-term, bang, 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 you won't have seen that approach. But I have used the approach I use for stocks, I have used in other markets for, 10 years. But I'm just focusing more on stocks. So in terms of stop loss, trading breakouts, all that stuff, if I look at what's my best performer at the moment is Eli Lilly, for example. So I bought those 22nd of Jan, Eli Lilly, right? So Eli Lilly, 22nd of Jan, they've gone a bit nuts. So I bought them here, and I bought them because they broke out. Yeah, so that's why I bought them. And they've gone, I don't know, what have they done? About 15% since I bought them, bit of a fluke. But yeah, breakout trade. And of course, because all I'm looking at for stocks is daily charts, I'm going to have wider stop because I don't care about the day-to-day noise. What I care about is the overall trend. So what have we got? So I bought Google this week. So Google, I bought those on Monday or Tuesday. Where did I buy those? Hold on a second. 144. So just buying the dip in those because the trend is up. It had broken out. Blah 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 blah. But I'm a big fan of wider stops. Anyway, I mean, some people might think they're wide, but in volatile markets, you need to give markets time to move around, don't you? Oh, my two shorts are doing well. I'm short Coca-Cola. I'm trying to find more shorts because of the trend. I went short Coke earlier this week. Can't remember when. 5th of Feb. And I'm short IFF as well because the trend is down. So I do try and have some shorts in there to balance it up. And again, going with the trend, I'll go with a breakout. So I'm not doing anything differently when it comes to trading stocks. It's just an approach that I haven't talked about much on the various YouTube stuff I've done because we tend to look at shorter term stuff on the YouTube. But for me, I absolutely prefer that style of trading because it's just low stress, just giving the market time to move. CHTR earnings, I know these are getting clobbered the last week, haven't they? Time to go long, you first is, I think, my answer there. I mean, they've absolutely been pummeled, haven't they? Charter Communications. I mean, it could be an interesting trade for Monday. If we've got these old lows at 297 from October, they went sailing through. If they've overshot, it could be an aggressive trade. But I mean, that thing has been going down 2 years plus, isn't it? So it's not one that really appeals to me. But it's quite interesting for an aggressive trade next week, with if it does make some sort of a base down here. What's the news today? Oh, someone bought 1.4 million dollars worth of shares. Blah blah blah. Let's see. It could, that would be the aggressive trade. Be a buyer at 290 with a stop at 270. $20 risk. If it claws back half that range, there's $50 upside there. It's not one for me because the trend is down. but it's perhaps an interesting aggressive one. Can we have a look at UiPath? Gapped up last 2 days. Okay, gapped up. It's interesting. So May 21, they were $90 a share, and they've been as low as 10. I would buy it. It's just whether or not I buy it now, isn't it? Whether I try and wait for a dip. So I would much rather have a dip to buy. So our hindsight trade is down here in October, coming back to that trend line, down at $15. Nice trade. I don't know what I would do. I would rather do nothing. If I had to do something now, I might be tempted to go short with a stop above 27. But the trend is up, isn't it? So really, I want to be a buyer. But I'd probably rather wait for a breakout and think about buying it, or wait for some weakness and buy it. So for me, very exciting couple of days, but I'd rather be a bit more patient. And then I might miss out on it. But there we go. Roku earnings next week. ROKU. Roku Inc. I would buy that as well. I have a bit of a problem with these ones that have run away quite a bit, which this one has. $55 end of October, $95 today. I would be a buyer. Again, I'd ideally not want to buy it today. But if I was a buyer now, I would want my stop the other side of 79, which is a wide stop, but it's a volatile stock, isn't it? But interesting one, that, isn't it? Interesting. I mean, they, again, absolutely clobbered, aren't they? 480, July 21, $40, Jan 23. So yeah, I'd rather... It'd be interesting if they get clobbered a bit on their earnings, but then lots of stocks are just sort of soaring away a bit on earnings at the moment, aren't they? So yeah, let's see. Let's see what happens. But absolutely, the trend for the last year is up. I'd be a buyer. It's just a question of when. Could you please share your thoughts on natural gas? We did look at natural gas, but just a quick one again. I think I hate it, natural gas, so I don't trade it. But for me, it's does it hold down here? Does it hold at these lows? These lows from April 2023 are down at 189. I don't know. Let's see what happens next week. But that, if you really wanted to buy natural gas, that could be the trade. But yeah, it's no interest to me because it's too crazy. Again, natural gas. But let's see what happens with those old lows. NVIDIA, NVDA. I'm going to say it's a buy because it just goes up. Oh, and it's gone up again. Crazy market. I mean, what are you going to do? I wonder, let's have a quick look. I wonder, is the net position of people short NVIDIA? Do we think? I don't know. I bet loads of people have been trying to call the top in that, haven't they? Can I get a sentiment thing anywhere? I'm trying to find sentiment. Oh no, well here we go actually. So here's a popular broker. 58% of clients are long on this market. So most people are long, but still 42% of people who have a trade on are short NVIDIA. Yeah, 42%. And the thing just goes up every day. Yeah, I mean I'd have to be a buyer. So it broke out through a fiver, $500, and here we are at 700. So, I'm not going to argue with the trend. The problem is, it's another one of these stocks that's really run away. So where does my stop go? If I was a buyer today, I would have my stop probably the other side of $660. That would be the tightest I'd have my stop. It's a volatile stock, isn't it? What are you going to do? But for me, the trend is most definitely up. Alibaba rebound ? Let's have a look. Oh, not for me. That's been an interesting one, Alibaba. It's the Chinese. Is it the Chinese Amazon or Chinese eBay? Whatever it is. But been going down, broke out, looked like it was recovering, and it's just gone a bit drifty, isn't it? The trade, again, the hindsight trade was here, 6th of Feb, earlier this week, go short. Still weak today, it's had a weak opening today. So for me, the trend is still down. So no interest at the moment for me in that one. What will be interesting, I've drawn that bad, is do these old lows hold? So for me, if it goes, You know, the lows for Alibaba, October 22, down at 58. You know, it traded down to 60 something, 67 in January. Is it going to nudge its way back there? Is the 58 going to hold? So again, for me, no interest in that one at the moment, but interesting to see if the old lows hold. So they had earnings this week. What did the earnings say? Oh, they were a little, nothing really. Okay. I'll give 50p for anyone willing to call the top of SMCI, Super Microcomputer. Oh, look at that. My words. That's doubled. More than doubled. In under a month, isn't it? That's crazy, isn't it? Why are they doing so well? Who knows? I'm going to have to Google it. Hang on. Super. It's a real 80s name for a company, isn't it? Super Microcomputer. They're selling computers with like 512 meg disk drive or something. I don't think they are somewhere, are they? Earnings beat. They beat earnings a week ago. Amazing. There you go. Look at that. We could all do with one of those in our portfolio, couldn't we? Yeah, I won't be taking up your 50p bet and trying to call the top on that one. Have a look at Moderna. Short. I was short Moderna last year. I don't have a trade at the moment. So the old the drugs company. Yeah. Again, it's if I was short now, where would your stop go? Where would my stop go? The closest I'd have it would be above 105 or something. The better short, again, it's a bit of a hindsight trade, but was up around 110, 107, something like that. But yeah, that trend, that trend in Moderna, you know, they peaked because they were one of the vaccine companies, weren't they? So they were nearly $500 a share, and here we are at 89. So I had been short somewhere in here from last summer. I'm not sure anymore. They had the rally, and it's just lost steam again, isn't it? So there you go. What can you do? Yeah, they still look pretty weak. And also BATS short, British American Tobacco. Yeah, British American Tobacco. And I'd rather sell a rally. I suppose it's rallied a bit the last couple of days. I suppose if you were really convinced about a short on BATS, it's to go short now with a stop above 26, because it has been trending down since here, June 22. So yeah, it's been pretty weak, isn't it? EWZs. Is that? Which is this one? iShares MSCI Brazil. Is that what we're talking about? Let's have a look at that anyway. Brazil. Oh, it's a bit boring to me, if that's the one we're talking about. So yeah, it doesn't really do much for me, that one. I've got a Latin American ETF. There we go, in my SIP. How's that doing? That's also boring. There's not a lot going on in Latin America at the moment, by the looks of it, if that's the one we're talking about. So a little bit sideways to me. I'd rather buy the dip than not. So if I was a buyer, it's not a terrible one actually, is it? You know, it has been recovering since March last year. You know, you're still up. Actually, you're up 30% since March last year. So if I was a buyer at 33, I'd want to stop at least the other side of 31. So yeah, it's not terrible, isn't it? Are you going to Twickenham tomorrow? No, unfortunately not. But if anybody has got a spare ticket and wants to invite me along, just drop me an email. Watch the massive Welsh team take away the English in the second half. Let's see what happens. It's basically Nvidia versus SMCI, the AI stocks war. Okay, fair enough. So that's it. That's it. I think if we're done, aren't we? So let's see. Let's have a quick look at these US stock markets. I think I may well have missed the trade today. I was thinking about buying. I put it in the WhatsApp group this morning. Around about 17.8 on the NASDAQ. But let's see. You know, it's a pretty volatile start. We're only 45 minutes into the day, aren't we? Anything can happen. So I'll look to do another US stock trade this afternoon. S&P, I'm guessing, looks pretty similar. Yeah, these markets, it's incredible, I think, these US stock markets. But you cannot argue with the trends. You know, this move since October last year, the S&P has gone from 41 to 5,000. So it's 20% move plus in the S&P since October. So absolutely, they are overstretched. I'm sure there are loads of people shorting it on the way up, but they're still strong. The sensible side of the market for me has been to be long until it changes. And with new highs today, it hasn't changed today so far. So let's see. These markets are still strong. So I think clearly I'll be watching those next week. Oil next week to see what happens up here at if we get near 80. Heating oil because it's so strong. And that's it. So lots to watch. Big focus for me on stocks. So let's see where we are next week. We'll come back and do it all next week. If you want to try the WhatsApp group, it costs you 40 quid for a month. Less than a price of a cup of coffee a day to have all this fantastic insight every day. And more on that stock stuff. Just go to the website and put the code YouTube in. Otherwise, we're done for another week. Let's see where we are this time next week. Should be around next week. But another great week for stocks. Loads coming out next week with that inflation and GDP data for various parts around the world. So let's see. So don't lose any money if you can help it. And we'll do it all again next Friday. Have a good weekend.